Hello, welcome to the Money Pit. It's Sunday night, calm before the storm, not much is happening, so I think it's the perfect time to go over Fibonacci retracements. Before we do that though, we should look at our trading portfolio. They say the more you look at your bank account, the more you feel broke. So we're probably just going to do this every couple days, see where we are. All right, we're only down $100, everybody. That's pretty good. Storage A doing well. Looks like Engine's our real loser. If we were fiddling more frequently, we'd probably put all the storage into Engine, but we're just going to let it ride for a little bit. I've taken off all the other indicators, so we won't be fooled by anything else. What should we start with? I guess we should start from what are Fibonacci's? Fibonacci numbers are the magical number of the universe. It shows up everywhere in nature. It's just a pattern of numbers that can be seen throughout the universe. A lot of plants having 3 petals, then 5 petals, so on and so forth. Yeah, just pretty much following it. Okay. So many shells. You could have just literally slapped that on any picture. What is that? Okay, you see? 5. 5. And things just react to it. And the reason why it works is because the more people that believe in something and they trade along those lines, the more that those principles actually come to fruition. Here we are on a short-term SPY chart. I don't want this to be too complicated. There's so many videos that you can go watch besides this one about this for actual education. The important thing to note is that price, as shown here, clearly moves in waves, whether down or up. When it's moving down, you can see that there's this kind of resistance. There's this channel that it follows. And a good way to gauge that is Fibonacci's. You can see that from that move, we almost touched the 786, touched the 618. From this drop, came up almost to the 786, 786, and so on and so forth. I actually prefer the New York Composite for this. It's pretty clear to see that we have been nothing but straight up. So a way that you can measure that to see how high it could theoretically go is from the last high to the last bottom. But that I don't really think that that's where we're measuring from. I think that we should start measuring from much further before, because that was short, artificial, got bought up real fast. I think we're more in line with the 10-year bull run that we have experienced. So if we draw the Fibonacci's, this says that price could potentially react all the way up here, but that doesn't seem quite right. So then what happens if we draw it from the dot-com bubble? There's a million ways to draw this and a million ways to interpret it. But for me, 2008 felt man-made, bad business decisions. 2020 was extenuating circumstances. I think that the last true kind of collapse shift in technologies that we've had was back in 2001. Down to the lows, however you want to draw that. You can see that we're pretty up here. Reaction or support at several major levels. It's going to happen on any chart, but this one's pretty convincing to me. It's pretty wild to say that we are completely up and above the 4.236. Normally charts, at least in crypto, explode past this a little bit. Hopefully you can get out and then they head down. Over on Ethereum, if we do the same thing where we draw out from the last one down to the bottom, going strictly off this indicator, looks like we might find support and head higher. It's up to you if you want to gamble playing with the last box, because it can get pretty risky up there. Now, assuming that this is the top, how far would we drop? From that, instead of top to bottom, you do bottom to top. Assuming that that's the peak, a reasonable retest after such exponential growth would be falling back to the 786. We've seen that. Even Ethereum, based off of how explosive it's been, seeing it at $1,000 wouldn't be crazy. It could find support at all of these, and it probably will. But ultimately, for it to move back to the 786, it could still be ratcheting up over the next decade. So we said that this was the bottom, and if we're assuming this is the top, then the 786 has us coming back down here, practically retesting 2001 highs. Then the SPY, it's interesting. These are almost perfect double top with the 500 biggest companies. So from the bottom to the top, slap me silly, call me crazy, whatever you do. In a really, really bad situation, that 786 retracement puts us on top of our last 2 highs. It won't happen guaranteed, but nothing's impossible. If that happened, 67% drop. Now assume you want to measure from there, 786 down at 257, which is still a pretty substantial drop. That's still down 40%. So based on Fibonacci's, we're kind of getting into dangerous territory, especially zoomed out so much. Hopefully you understand it a little better. I know I don't. And I'll see you for indicator 3.